Welcome back to another episode of College Cash Corner, the podcast where we help support you in building a strong financial understanding. I'm your host, Tara, and today we have a special episode dedicated to the important topic that often gets overlooked, credit scores. I'm joined by my co-hosts, Natalia and Victor. How are you both doing today?
I'm doing great. Excited to dive into the world of credit score and help MCC students understand the importance.
It's great to be here as well. Credit scores can have a significant impact on our financial lives, so it's important to grasp the basics.
So, to begin, let's explain what a credit score actually is. Natalia, could you take this one?
Yes, a credit score is a three-digit number, range from 300 to 850, that represent your credit worthiness. The most commonly used model is FICO score. It helps lenders such as banks or credit card companies determine how likely you are to repay your debts on time. The higher your credit score, the better the interest rates and terms you will be offered.
And what numbers represent an excellent credit score or a poor credit score?
Generally, a credit score of 700 or higher is considered to be in the good to excellent range. A score below 700 is considered a fair to poor score range.
And why do credit scores matter?
Your credit score matters because it affects your ability to secure loans, credit cards, or even rent an apartment. It can also influence the interest rate you be offered. Having a good credit score can save you thousands of dollars in interest over time. Plus, a strong credit history can open doors to better financial opportunities in the future.
That's very true. Building and maintaining a good credit score and credit report can be especially crucial as MCC students graduate and enter the workforce. A good credit score and good credit report can also affect your employment opportunities. A 2021 survey conducted by the HR Research Institute found that 51% of employers' background screenings in the U.S. included a credit or financial background check. Employers might consider credit report checks as a way to determine if a person is organized, responsible, reliable, and trustworthy. They don't see your credit score, but they see a modified version of your overall credit report. So, the next thing that we should know, what determines a person's credit score?
Credit scores are influenced by various factors, including your payment history, credit usage, lengths of credit history, types of credit, and new credit inquiries.
Yes, payment history and credit utilization are the most significant factors in determining a credit score, accounting for 65% of the overall score. The first biggest factor, payment history. Payment history refers to whether you've made your credit card and loan payments consistently and on time. The key words are consistently and on time. It's crucial to pay your bills promptly because late payments, even if it's just one late payment, even if it's just a little less than the minimum payment required, can negatively impact your credit score. In fact, one late payment can drop your credit score by 100 points. And late payments and inconsistent payments will stay on your credit report for up to 7 years. So, note to self, pay bills on time and be consistent with your payments.
Let's not forget about credit usage or utilization. Credit usage is the amount of credit you are currently using compared to the total credit available to you. It's calculated by dividing your total credit card balance by your total credit limits. It's recommended to keep your credit usage below 30% to maintain a healthy credit score.
Right. For instance, let's say I have two credit cards, and between the two cards, I have $1,000 of credit available to me. To stay below 30% credit utilization, I do not want to carry a balance of more than $300 in total on my credit cards if I can help it.
Using that example, what if your car needs a repair and it's going to cost $700 to fix it? Should you not use your credit cards to pay it off?
That is a great question. If I have an emergency fund, I'll use that first. After all, that's what an emergency fund is for. However, let's say I have no other option than to use my credit cards, so I charge the full $700 to pay for the car repair. When my credit card bills arrive, the best thing I can do is to pay off the entire $700. If I don't have the full amount yet, I should aim to pay off at least $400 of it, reducing my carryover balance to $300, which is 30% credit utilization. And in this case, I would understand that I will have to pay back that $300 with interest now, so I will work to pay that off ASAP. I'd like to point out one other aspect of credit utilization. You also want to be mindful of the percentage of the credit limit you are carrying on the individual credit cards. You want to avoid having maxed out credit cards. Credit bureaus see maxed out credit limits as a red flag that the person might have problems managing their money, and that could affect their credit score. Some people already have started establishing a credit history, but find themselves with a low credit score. Natalia, could you share some tips on how to improve credit scores?
Certainly, as you have already mentioned, Tara, one of the best ways to improve your credit score is by making consistent and on time payments. Set up reminders or automatic payments to ensure you don't miss any due dates. Another tip is to keep your credit usage low by paying off your balance in full or reducing your overall debt. Additionally, avoid opening too many new credit accounts within a short period, as it can raise concern for lenders.
I also recommend checking your credit report regularly to identify any errors or fraudulent activities. You're entitled to one free credit report each year from each of the three major credit bureaus: Equifax, Experian, and TransUnion. Know that when you look at your credit report, more than likely you won't see your credit score. Oftentimes, you can pay a fee to have your credit score included in the report. Alternatively, there are also several online platforms and financial institutions that offer free access to credit scores. And don't forget to maintain a long credit history by keeping old accounts open, even if you don't use them frequently.
Those are all fantastic tips. Thank you. Before we wrap up, let's address a couple of credit score myths. One of the myths is that having no credit is better than having bad credit. What's the truth behind this?
That's a common misconception. Having not credit history can be just as challenging as having bad credit. Lenders need to see track records of responsible credit usage to assess your credit worthiness. Starting early, even with a secure credit card, can help you build a positive credit history.
And remember, building and maintaining good credit is a marathon, not a sprint. It takes time, discipline, and responsible financial habits, but it's definitely worth the effort.
Another misconception is that it's good to carry a balance on your credit card because it shows that you're using the credit that you have. Victor, can you explain the misconception here?
Paying off your credit card balance is full by the due date is actually a good financial practice. It helps you avoid occurring interest charges and prevents debt from accumulating. It also demonstrates responsible credit management, which positively impacts your credit score. Carrying a balance and accruing interest can actually lead to unnecessary debt and financial strain. Experts say to pay off your credit card balance in full each month to avoid interest charges and maintain a healthy financial situation.
And if you pay off your debt each month, you are keeping your credit usage under 30%.
Thank you, Natalia and Victor, for your valuable insights. Understanding credit scores is an important step in mastering your financial well being. That's it for today's episode of College Cash Corner. We hope you found this discussion on credit scores helpful and informative. Before we go, we would like to remind MCC students that the financial literacy team is here to support you in increasing and sustaining your money know-how. Go to MCC's financial aid website. On the left side, click on Financial Literacy. There you can book an appointment to meet with any of us one-on-one to get individualized support and resources. You can register an account with Cash Course for free, view upcoming workshops and events, and learn about other financial resources available to you. Remember, knowledge is power, so keep learning and taking steps towards your financial goals. Until then, stay financially empowered.
Thanks, Tara Victor. I definitely learned a lot today. I hope all our MCC listeners too.
Until next time.